Well, after you have watched the video on the comparison of the two inventory methods, I will now show you how the closing stock records are being maintained and generated in the cloud system. So let's move into the software. So once you set up the book, when you set up the new account book, you'll be given a choice whether you want to select the perpetual inventory method or the periodic inventory. So by default, the system was set up as periodic, but you still have a choice to select if you want to practice perpetual inventory. So now this book is set up under perpetual inventory method, and you can see that under the settings here, under this inventory, the book is set under perpetual inventory. So once it's under perpetual inventory, you'll notice that there is no periodic stock value. The button just disappeared. It's not in here, right? So now I'm going to do the transactions on purchase, right? So once it's set up ready, so I'm going to do the transactions to show you. So let's go into the product code, which I've already created these two sample product code. So I'm going to use one of them. So let me do the look at the chart of account first, right? So in the chart of account, you notice that we only have cost of goods sold, right? And in the balance sheet, under current assets, you will have a stock code over here, right? So now I'm going to do the transactions. The other one will be you will have a inventory loss account for adjustment, right? So let me key in a purchase invoice, right? New. I'm going to click through here. Let's say Q4, and I'm going to use the month of June. Okay, and I'm going to purchase this as say 6 units. So 6 units will be 1,002. So as you can see that when you do the purchase, it will credit the creditor and it will straight away debit the stock account of 1,200. Okay, let me see. Okay, let's look at the report on the balance sheet. Reports on balance sheet, right? So we inquire, print, okay. So you can see that the stock value is debited as 1,002 and the creditor is 1,002. Okay. Next, what happened when you return the goods? Let's say, so when you return the goods, this will reduce by 200 because the cost is 200, and this also reduced by 200. So let me do a purchase return, right? So I'm going to copy from this invoice, and I'm going to return 1 unit. Okay, 1 unit. 1 unit which is defective, right? And you return it on, let's say, on the 10th, right? So there'll be a CN number from the supplier, and you save it. So let's look at the report again. Into accounting, report, we go back to the balance sheet, inquire, preview, okay. So you can see that it is reduced by 200, both sides, alright, because this is a purchase return. So stock value will be reduced by 200 and the creditor also reduced by 200. Okay, now let me do a sales invoice, new AA company, let's say on this date, the purchase, okay, and I'm going to sold off 3 units. 3 units, my price has increased to 350. Right, 350, or for easier, I would say it's 400, the selling price right now. Okay, so 3 units will be at 1,002 selling price. Save. Right, so now we look at the reports. We will go to the stock card first. All right, go to report, stock card. Let's look at the stock card for this particular stock, which is this. Inquire, preview. You notice that we purchased in 6,002, we return 1, so we will minus the $200 cost, come 1,000, and you sold 3 units off, which means that total of 4, right? So that means remainder is 2 left for the stock, balance the quantity, and the unit cost is 200, so this is 400. So this will be reflected in the balance sheet. So let us look at the balance sheet right now. Accounting, at the report, balance sheet. So we look at the stock card, the balance sheet report. So you can see that the stock balance will be 400, right? And that is the debtor because you sold the 3 units to them. And this is the creditor which you are still owing 1,000 to them. And the profit made is 600. So let's look at the profit and loss statement. So we go back to accounting, back to reports. We will take up the profit and loss, inquire, preview, right? So you can see that the sales is 1,002. Because you sold 3 units, the cost of goods is $600. And then the net profit is 600. All right, so that is your profit made. So you can see that in the statement, you won't see opening stock, closing stock, purchases, or purchase return. So this is the layout. We just show you the total sales made and then the cost of goods taken out from the stock value taken out for this 3 units sold, and then this is the profit margin made. Okay, so now let us do a credit note. What if there is a sales credit note? Okay, sales returned by the customer. Just now we sold to this customer, AA company, we sold 3 units, remember? So we sold 3 units. Let's say he returned 1 unit. So when you return 1 unit, the stock value must, when the stock is returned, the stock value will be increased by 200. So let's see the effect of it. So we will copy from the invoice, right? And let's say return on the 23rd, right? And the reason is defective. And it's 1 unit return. 1 only. So, right. So you can see that your unit cost is 200, right? See. So let us look at the profit and loss account. Profit into the end of the month, inquire, print. Okay. So you will see that the cost of goods sold is 800, right? And your profit is less by 400. So let us look at the balance sheet. Print the report. Okay. So you notice that the stock value is $600, right? And then the trade credit is still 1,000 and the profit made is 400. So let's look at the stock card. Does it reflect as 600? We look at it. Stock card. That will be the stock. Okay, we look at the report, stock card. Look until the end of June. Inquire, preview. Okay. So you notice that, just now it was 600. Then because it returned one more unit, returned back because of a credit note. So it has increased back to 600. So this is how the perpetual inventory system function. All right. So you only have it will reflect the actual stock value in the balance sheet account. So you need not have to key in any closing stock figure. Now let's move back to the periodic inventory method, right? So I will switch account book to the one that I have periodic inventory. Now, this is periodic inventory. You notice that there's a periodic stock value over here, right? Now we look at the setting. Setting for inventory, you notice that this is periodic inventory system, all right? Now, if you want a live stock balance, you also can check over here. So when you check over here, then you need not have to key in your closing stock figure at the end of the month. The stock balance, that figure will automatically be posted to the balance sheet if you check over here. If you didn't check over here, then you need to enter your periodic stock value over here. Let's say, for example, I've gone into March, all right, year 2021. So let's say April, what is my closing stock balance? So I need to print out my stock balance. I need to have a look first as at April, end of April, right? Inquire. So I know that my figure stands at 37,354, right? So what I do is I need to go to here and key in 37,354. I have to key in over here, all right? That means there is no movement of stock. There's no sales in April, and the stock is still the same, right? So we look at here in the invoice here. So we don't have, all right? So the stock still remains the same. So what you do is that you have to go back to your stock reports, balance. Let's say as at April. You inquire, you check your stock balance from here. And you know that it's 37,354. What you do is you just key in here. Key in here 37,354. And you just save it. Save it. Right? So when you print your profit and loss, so go to accounting, report. Now you will see that the opening stock is the same and the closing stock is the same because the March closing stock is still the same figure. So we go to report, we go to profit and loss. Let's go to print the April. April, I show zero balance. Let's say I print this month, last month, right? Inquire, print, and then I take a 2 column. So you notice that the opening stock, right? This is the last month one, okay? This is March, this is April. So ending is the opening stock for the next month. This is the April month, right? There's no purchases, there's no sales for April. So this is how it's shown as the closing stock. And this figure will be reflected in your balance sheet. So now, okay, let me do a sales invoice for April so that I can get a clearer picture. Okay, I'm going to do what others, all time favorites. Okay. This is Samsung. Okay, I'll put this as 1. That's 1. So that's a sales in April. A date. Take backwards. Let's see, 21st April. See. Alright. And let me do a purchase. Purchase invoice. New. And let's say I purchase from AMT A999 April month 15. Let's say I just purchased a Kapasky, right? Just 5 units. See. Right. So now we look at the report, or at the accounting report or P&L. April month. So you can see that, alright, I choose the report wrongly. Let me cancel. I will choose as this month, right? This for April month. So you see that there's a sales, there's an opening stock, there's a purchase, there's a closing stock, alright? So now the closing stock we need to check again, right? So we go to the stock, because we did purchase some stock, so now we have to check the stock balance again as at April. Inquire, then you notice that your stock figure is 30,964. 30,964, then you need to change it at the periodic stock. So you need to change 30,964. 30,964, enter, and then save it. Right? So now you can go back to look at your profit and loss with this actual stock balance, closing balance in April. And we will look at this month, Inquire preview. Okay, so you can see that the closing stock is 30,964. Now this figure will automatically be reflected in your balance sheet statement when you print your April balance sheet. So you can see that print. Okay. So it will be reflected as stock on hand 30,964. Okay. So this is how you do when your inventory is a periodic inventory system. It's a periodic inventory method if you're selected. So in periodic inventory, you need to key in through here your closing stock balance as and when. So you have to key in through here. Now, if you do not want to key in, then you can make it live. Make it live, so that means every month I need not have to come to this periodic stock value to key in. It will straight away take from the stock balance figure and it will be generated out in your P&L report as well as in the balance sheet. So the other way is to go back to the setting, go to application and make it live, right? So when you make it live and you look at the stock balance for May, right? Let's say for example, May, I make it live. The stock balance for May 31st. Inquire, so you can see that it is still 30,964 because there's no purchase in May. unless I do a purchase in May. All right, so there's no purchase in May. Let me do a purchase in May. Say for example, I go to XYZ marketing, put it May figure, okay, and I just put in just purchase a product in. All right, so let me go to antivirus Avira. So I bought 5 copies. Okay, and that is 259. Let's say now the price is 260. So it's 1,003. Save it. All right. So now I'm going to look at the stock report again, stock balance in May, because May I make it live. All right, in the settings there. Inquire. So you notice that this is 32,264. So now I go and print the balance sheet report. Balance sheet for May 31st. Inquire. So you can see that the stock on hand is 32,264. This is 32,264. So I need not have to go and key in over here. Alright, I didn't key in because I make it live. Alright, so it is up to you whether you want to, this is done under the setting over here. So if you make it live, then you need not have to key in every month at the periodic stock value. Alright, over here. So if you make it live, but if you untick it, you're not making it live, then you have to key in yourself. You have to check the stock balance and key in yourself. There are pros and cons now, whether you want to make it live, because once it's live means it's just stick from the stock balance figure and it just put it into your P&L and the balance sheet. So sometimes if you didn't complete fully all your purchases, your purchase return, then the figure which is being taken live will not be the actual figure of the stock balance. So but in the cloud accounting system, they do provide you either you key in monthly through the periodic stock value, or you want to make it live. So it depends on your management. So that's so much about how you key in your closing stock value for this periodic inventory, right? And earlier I've shown you the perpetual inventory. Okay, so hope you understand by looking at this, by watching at this video, that you know how to key in your stock value and how the stock value is being reflected in the balance sheet. Thank you.